Okay, welcome traders to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, April 11th. Michael Boutros with you. We just got the release of US CPI numbers in line with expectations. Most importantly, most notably, core popping to 2.1% as expected. Average hourly earnings also rise 0.4%. Month over month, so the year-over-year figures are really what we're going to want to be looking for here. But core at 2.1 at expected is pretty good. Month over month came in at 0.2 as expected. Okay, so pretty much an inline expectation, guys, this morning. Just wanted to run that through with you. Good morning to everyone in the room. Chris, Mark, we got all the pizza in today. Great. Hey, Pooja, Tom, great to see you guys in the room. So on the menu, we have Aussie dollar. It looks like that was a reversal off the low. We're trying to confirm that that low is in place, but we're coming at some near-term resistance right now. Pooja, I'm actually still working with that pitchfork that you highlighted yesterday to us, so it looks still pretty good. Dollar CAD, a little bit of a rebound here possible, but I think ultimately you still want to look to sell that rally. Pound yen, really nice turnout resistance. It's kind of just sitting in it. Watch out heading to the US Open. I think you could get a little bit of a bounce here, but that critical resistance still in focus for pound yen. Euro CAD, sterling CAD, euro yen with a breakout, testing support right now. Dollar yen, I'll just review. I don't really know what's going on there because we highlighted it earlier in the week, and then we'll hit euro dollar and dollar Swiss. Also want to take a quick look at the SPX today. You're seeing a little bit of a heavy, or the futures are looking or pointing to a heavier open. You know, these tweets from Trump, I mean, despite what you think about the guy, it's, you know, pretty unprecedented stuff. So, you know, it's markets. I'm not really sure how the markets are going to digest it. It's kind of like reckless talk, but keep your eyes on the price action. For the SPX, it's still that major critical support that we rebounded off of earlier this week. So, you know, even if we head lower today, we gotta be mindful of that support. Pete wants to take a look at sterling. Yeah, okay, we'll take a look at pound. Been looking at pound yen more, but pound, I do think you get a kickback. There's long-term structural resistance here, Pete, but we'll take a look. Ultimately, that's still in the long-term uptrend. Okay, so any other questions or trade setups? As usual, feel free to throw them out on the message board at any point throughout the session. So a quick look, you know, I haven't really been writing to you guys too much about the DXY, but the levels are the same from last week. We really haven't changed anything. We're just working through the fib levels from the retracement, from the advance off of last month's late low. You know, broader terms, here's what the DXY looks like on the, you know, weekly. We've been following the analog from 1994. We talked about, you know, at the open this week, looking for confirmation of a high. Bearish invalidation is still 91.33. And the analog would call for us to turn lower this week specifically. So it's following through so far. Long-term structural resistance still doesn't come until 88.18, 88.17. So on the longer-term front, the weekly charts, everything looks pretty much unchanged, okay? Looking at the momentum signature on the weekly chart, it looks pretty good. Turned from a 3-point, you can call it 3 or 2-point resistance trigger. So all things held constant, things are playing pretty nicely. Now, I don't have any support down here per se, okay, but 89.28 is a long-term 618 that we've been following here on the intraday charts. This is from the advance off the lows that we made late last month. Basic trendline slope, or basic trend line off the lows, also converges there. So I think you still have room for a little bit more of a drop. Here's what it looks like on the daily chart, okay? Momentum turning ahead of 60, okay? You still haven't really broken a support trigger like this yet. It looks like you're testing that right now today. But basic trendline support, 2018 low day close, 100% extension. This is of that drop from the high. So, you know, you've made a new high since then, but seeing as how it did call the low, open that up 88.90 to 89.08, key support. And that's really the downside break that would open up the 88.17, 88.27 level. Okay, any questions on DXY? So obviously the implications for the euro are there. I do think you get an interruption before this thing just, you know, completely collapses lower, but immediate focus is still for a move towards that trend line. Sterling yen, please. I'm short from 151.90. Stops at break even, Pooja. Yeah, I mean, we'll definitely take a look at that third on the list. I think you could get a bounce, like I said, Pooja, into the. We'll take a look. We'll take a look. Okay, so if there are no questions here, you know what? Let's start off with pound yen, since Pooja's already involved there. So here's what pound yen looked like yesterday. You know, the major focus was basically on this long-term structural resistance, you have the median line right here for this broad structure we've been following. This is just from the lows of last year. Okay, 618 retracement of this year's current range gives you 52.17. The median line's right there. Take it to the daily chart. You also have the 2017 high day close. Okay, and that comes in at 151.84. So we gave you a range of 151.84 into 152.17. Major critical resistance. Momentum is basically probing into the 60 region. And it's still an uptrend, right? But resistance is resistance. So, I didn't just jump into this blindly yesterday, but the near-term picture, if you looked real close in price action, was showing exhaustion here as you're heading into that very region. We sat in that 51.84, 52.17 region for hours yesterday, even into the Asia Open. But we finally started to move lower. So look, the initial support for the decline, 150.59, is last week's opening range high. Okay, it is also pretty darn close to the objective weekly open, right? So pretty decent level as far as where to target on the downside. You're kind of losing some steam here. Here's what it looks like now. Pound yen. Okay, daily chart, really nice. Okay, tried to probe through it. There's the reversal. We don't want to get carried away with this just yet. We don't know that this is a reversal. We actually made it through 60 on the upside in momentum yesterday on the close. So you approach these turns with caution, right, Pooja? So it's a break-even stop, which is, I do like that. But here's what the near-term picture looks like. Momentum looks pretty good. And especially on that last spike, if you got it in early Asia, really nice, right? Momentum unable to make any new fresh highs on the profile as price action continued to make new highs. So it looks pretty good on the reversal. Again, you're seeing some hesitation right here. So, like real near-term stuff here, Pooja, slope could get a little bit of a bounce. I'd want to see 51.84 hold as resistance again. So 51.90 at a break-even stop for you is pretty good. It's a very protective, conservative way of playing it. All things held constant, we're trying to play the turn. So if you're, well, I can tell you what, I'm going to take off a little bit here or at that trend line, and then we'll go to break even on the rest and see if we can get the continuation lower. You have to respect the fact that we're still, it's still a constructive trade. We're just trying to play the turn here off of a major critical resistance. So do think ultimately you get lower, Pooja. So I like how you're playing this. Just taking a near-term approach. Now that we have a little bit more of an assertive turn, let's see what a basic 236 looks like. Well, 38.2 highlights the lower parallel right here. It's 49.47 on a bigger approach there. But the 236 comes there anyway. So 50.54, 50.59, same thing. I just take it at that swing high. And you look for some sort of structure to the decline. We don't have necessarily a high-low high to work with any type of pitchfork yet. This is really super short term, but you know what I mean? This is just a 30-minute chart here. Seems to have a decent parallel on the way down. It's the lower parallel here. So if you get a constructive move or if you get a rebound 51.70, you know what I mean? Pooja, would be like a really nice hold. But again, there is reason to believe, there's concern that you do get a little bit of a bounce here into the open of US trades. So just keep that in mind. Okay, real near-term approach. Okay, look for resistance right here alongside that swing low. Okay, so ahead of 51.70 would be ideal. And then once you get that high, if you do get a rebound and the break to the downside, then you have an extension to work with, 1, 2, 3, and then look what the downside targets are. But objectively, all things held constant, you're adding your term support here just from slope. Does that make sense? Pooja says, yes, entered after the last spike. Nice. Very small position, though. Thanks for mapping out the exit. Hey, you got it, Pooja. Like the entry. I mean, this was one of those ones where you kind of need to just grab your butt and, yeah, right against that spike high was the way to play it. Really nice reversal there, right? I'm building momentum divergence. So I like it. we just don't have the confirmation of the reversal yet. We got a confirmation of a pullback from resistance, and we treat that differently from the confirmation of a reversal. Once we start breaking some upslope, basic upslope, okay, or if we break the downslope for this, then you start to get the conviction that we have a larger reversal at hand. But right now, still got to be pretty decent, okay? Still got to be pretty nimble. Jorge says the abomination might be a better short. Jorge, Dal Yen is on there, so we'll look on that. It might be. I really don't. I'm just not a fan of it. And typically, when the dollar is pulling back, the yen is actually seeing some weakness too. So it's been a tough trade. So Jorge, we'll go over that in a moment. Hey, Dagon says, Mike, I logged in late. What was a good entry? So Puja has an entry from 151.90. That was like the ideal play. Basically it was like a 26 pip stop against the stop after the spike. You had to be up, pretty early here in the stateside. But if you're trading on Asia time, this was a really nice trade during that period. But on the rebound here, Dagon, the whole thing is we want to see resistance ahead of 151.70 if this immediate downside play has more legs. Okay, this is still critical resistance within the uptrend. It's uptrend resistance. So obviously, if it breaks to the upside, there is a huge possibility for a larger run near 53. But as it stands right now, if this turn has bigger potential on the initial advance, we should be finding resistance somewhere ahead of this region. Make sense? He says, got it. Thanks. Right on. Huge region here. Big, big, big level. But again, uptrend resistance. So you treat that a little different, nimble on the way down here. Okay, so that is pound yen. We went over DXY, that's number 1. Pound yen number 2. Let's go back to Aussie, number 3. So here's what Aussie looks like. We've been talking about this turn in Aussie for, it feels like, what seems like months now, 76.36. Y'all heard it here before. So, we're working with validation now. We're trying to validate that a low is in place. And let me go back to that chart, the weekly chart. While the initial break looks good, yesterday, again, Puja in the room here helped us identify a near-term slope to the upside. That resistance level on the upper median line parallel has held. But the weekly chart has some reason for pause here. And here's what it looks like on the Aussie. I'll bring your attention again to the convergence or near convergence of 200 and 100-day moving averages. That's in here. That's the 200-week moving average. This is the 52-week moving average. They're both consolidating right here, right at those former swing highs from the opening range of 2017. Okay, so on the weekly chart, okay, we would need to see a close above this, basically, to validate that a little bit more of a more important lows in place. Got a pretty good reversal candle. We didn't quite make it into 76.36, but we highlighted 76.44, I think, on the intraday charts as the level as well that we were watching. We just tipped that last week. So here's Aussie now. What was the level? 76.45, right? Which was those former pivot highs right there. Okay, and that was the level we were looking for. We got a spike right into that last week. Didn't know if that was going to be the low. And into the start of this week, we had a near-term structure that broke on this move. I thought we were going to get the final tag into there to get in. Market had something different in mind. On the rally, breakout of the median line that we highlighted yesterday, basic trend line slope for the channel that we were in, shifts the focus higher. Median line resistance, we talked about that. This is where we were yesterday. You're constructive above 77.26 on this immediate approach if there's further legs to the upside. But the major level of resistance I want to see cleared, 77.80 and 77.87. 1618 extension off the low, 50% retracement off the high, upper median line parallel. That's the level to break, okay? And on the weekly charts, well, here it is again. First of all, on the daily chart, I'll bring attention to the 100-day moving average, which is in blue. And then the, it's the close low that we made for that initial low in February, okay, and converges right there at 77.80, 77.79. It's the same level that's reflected by this Fibonacci range right here. Okay, so the levels are really clear. Again, I think into the US Open, you risk that little bit of a setback. As long as we stay above the median line on this immediate advance, you're looking for 77.80, 77.87 on the upside. Bullish invalidation. If we make it all the way back down towards the April Open, look what it converges on within the confines of the slope that we've been watching. Resistance, turns support, and the lower median line parallel of the ascending structure. So if we break below this, you're basically looking again for a drop into 7636 again, or even 7612. The same two levels that we've been looking at for the last month for a turn would be the scenario if we break back below the open. Okay. Any questions on Aussie or where we are right now? Dagon says long at 77.25. If we get the drop in 77.26, 77.25, I'd be looking for long triggers. Yes. Yes, if momentum was good. Absolutely. 100% Dagon. I'm with you on that. If you're looking for fresh entries, that would be the play. But we'd need to get some pullback here to get in, right? Top side from here, like I said, 77.79, 77.87. Look for that to offer some sort of pivot in price. It's also these swing highs comes right in that same region. You love to see that, right? Boom. More than welcome, Dagon. Cheers, sir. Okay, so that's Aussie. Still one of my favorite setups here. Long-term structural support, big region. Looking for validation that the low could be in place. Don't put it past this thing. I'm not just trying to scare you, but don't put it past this thing to get one more jackknife lower. I'm not favoring that scenario, but support is key support. Okay, so even if we're to break lower, don't just jump on the bandwagon. This is going to be the key break that you need to see. Number 4, dollar CAD. Here's what good old Looney looks like. So the break accelerating, breaking below downslope support here, but finding support right at this parallel. And we highlighted this yesterday, basic resistance, parallel off that swing low, converged right on the 618 retracement. So I was actually looking for one last low into 2582. You didn't get it. You're now checking real near-term resistance. Here's what dollar CAD looks like. First on the weekly chart, just to give you perspective again of where we are. 2582 is the 618 retracement of this year's range that we're currently holding. But you're also running into the 50 line here on the weekly chart for this broad formation that we've been following. So could get a little bit of a hang up, okay? You know, I still am looking broadly lower in price, but near term, you got to respect that 2582 level. Here's what it looks like on the intraday charts. Well, first let's hit the daily. Okay, so 2582 to the 2579. Sorry, guys, a little lag in the charts here. Okay, 2579 ends up being the yearly open. So yearly open support, again, another objective lateral area that you should be looking at, comes in line with the key 618 retracement. Cool, right? Could get a little bit of a bounce. Didn't quite scratch it. I'll show you what it looks like on the intraday chart, but there was slope support there. So we'll forgive that. Near-term resistance, local converges at 2634. 200-day moving average, and the 100% extension from the highs. So could be a nice pivot, converges again on that 50 line. And on the initial approach, if we find resistance around about that area on this swing, you know, you'd look to reassert it. But at the end of the day, this is the near-term resistance level that we're looking for. Here's dollar CAD on the intraday. So again, that 618, there's the highlighted region, converges on basic parallel support. So near-term resistance, here we are, 2634. Open that up into 2640, I think is what I noted last night. Yeah, 2636 into 26. Nope. Ah, 2579, 2580. Yeah, that's the level. In 2579, that's the actual open for the year. So as long as we stay below this, okay, look for resistance at 2635, 2640. There it is to the upside. If that hold has legs, if this is a break of the downslope, then that's objectively where you should find some resistance. Okay, and then you look to continuation lower. Below 2582, the next big target, and I do think you see acceleration even more so if you break this to the downside, guys. But if you do see that break, your next objective level is 2444 into 2454. right here, 24.43 and 24.54. Okay, that's going to represent the 764 retracement. Interestingly enough, it converges on the 1618 extension, and that region defines a nice swing low that we made back here in February. Nice swing high that we made back here at the start of February trade. So a decent pivot in price, big nice range on the way down. If you do see that downside break initially into the US Open, look for resistance here. Bearish invalidation, the only thing that would want to get me looking for long exposure would be if we break back above the Friday low. Okay, that would put you back above this 50 line, which has been a very decent pivot. So if we break back above that, you know, we're going to dissuade any type of short exposure on this. But as long as we do, we're looking for exhaustion. Okay, questions on dollar CAD? Again, CPI was kind of the biggest thing. You get U of Mich, University of Michigan confidence surveys towards the end of the week, but you know, I don't really expect too much from that. So keep a close eye on the dollar CAD sell-off at initial support. Dollar CAD going once, going twice. That's number 4. Number 5, Euro CAD. So remember the CAD extravaganza that we talked about yesterday. We went over all these dollar CAD crosses, and we continue to favor those levels. It's seeing some nice action here. So no change. We updated dollar CAD last night. Here's Euro CAD, right? Came in some support yesterday or last week on building divergence. You saw that bounce come. We failed ahead of the upper channel resistance. Here's what Euro CAD looks like. You know, we were looking for that continuation. Euro CAD. There it is. And we got a little bit of it, but we again fizzled out right ahead of the next target, which was 55.31. So here is that turn in overnight trade. Not really liking where that turn happened, but again, if that has legs, you look for initial resistance right here into 56.50. The weekly open, be mindful of that, is 56.80 and change. If the downside has legs, that's where you'd want to see resistance. Now, be mindful that the momentum signature is showing a little bit more of a tired downside push here. Here's price action making a lower low. Here's the lower low. If you take those two reference points, obviously there's no confirmation low in the signature. So you could get a little bit more upswing here. I'd be cautious about doing anything on the long side, though. We do like Euro ultimately higher, but that's at resistance. We'll talk about Euro in a moment. We do like dollar CAD ultimately lower, but that's near support. Okay, so I think you got a little bit more on the upswing here before it resumes. Ultimately, 55.31, 54.86 on the downside. Here's Euro CAD, by the way, on the why we were trading the short side. Here's what shifted our focus lower to begin with, right? Huge resistance, and you can even see this on EuroCAD for the weekly charts. Okay, there was the turn. This is where we start to curb our appetite for the downside. So you kind of need to be a little bit more cautious here. There is a support trigger that has not broken yet. Here's from the low in price. Okay, so you could get a little bit of a bounce. Okay, today's week, the weekly close will be important here, but leaving all this aside, even again on the daily chart, divergence, right? No new confirmed low in the oscillator. On the daily close, very important, bring it into a line chart to make it easier, a lower low in price. So the potential is there. I'm not chasing this any lower at this point. I don't have any exposure on this, just as reference. But keep your eye on the formation. I mean, it's still pretty clean. Still pretty clean. Here's the 240, just to show you where we've been. Okay, the pitchfork's still pretty clean on this. So there's the break to the downside. If you take a parallel off of these two highs, okay, look where that parallel converges. Let me make this clear. Okay, if you take a parallel off this high, converges there, converges there, converges with the weekly opening range highs, and that keeps the focus lower while below here. Okay, so objectively, we're just gonna, we're just going to basically call the weekly opening range highs our bearish invalidation on the immediate downside that we've been playing. Because the divergence signal, because of how this is reacting, I want to see failure ahead of that channel. That's the ideal scenario. But if we do clear the weekly opening range high, you probably risk a larger correction here. Okay, so you're working with two strong currencies. You want to see which is going to be the biggest winner. It's kind of a hard play. Digon, Mike, can you show where a good entry was on near the 2016 high? Which pair is that for, Digon? Did I miss that? Are you talking about Euro CAD? Ruth says, hi, my apologies on joining late. What is the expected impact of FOMC on the US dollar pairs? It's going to be limited, in my opinion. This is going to be what, the minutes? We already had, on occasions where we get the FOMC quarterly projections, Ruth, the minutes tend to give you less market reaction, right? Because we got the presser with Powell, we got to press him on questions, we got some back and forth. So that tends to be much more telling than actual minutes is. That being said, unless something comes out where there's, unnaturally amount of bullish talk or hawkish talk, yeah, it could move things, but nothing I would plan in my trading strategy on an intraday level. Ruth, we talked about the DXY earlier in the session. You have a little bit more downside to go. Could get a little bit of bounce, but at the end of the day, it's something I'll be mindful of as we get into the event, but not something I'll plan to trade around. Dagon, 161.05 area on EuroCAD. Thanks. Yeah, so 161.05, that was the level that we highlighted weeks ago, right? Because of the weekly charts where we were. It was the swing highs that we made for 2016. You had the upper parallel here. You were getting momentum breaking back below 70. That was the signal from a momentum standpoint. So, that was the ideal scenario. Whether you got an entry from there, Dagon, if you missed that entry, the ideal play was right here. After failure, and you start to move lower, an entry here against this stop would have been the way to play the confirmed reversal. You're never going to get the high, right? This whole misconception that we want to sell at the high and we got to get in at the low, right? It's never going to happen. You want to position yourself that gives you the best opportunity to take advantage of the swing. So on the initial decline here, we noted that specific day was an outside reversal. It wasn't outside, excuse me, but it was a reversal candle right off that high, right? Momentum was already marking divergence into that high. On the subsequent rebound, the ideal entry would have been somewhere around here for an entry stop against that high. Make sense, Dagon? I hope that helps. Feel free to ask questions like that. I'll kind of walk you through. Obviously, hindsight's always 20/20, so I try to give you a little bit more of a tell of what to look for as opposed to what happened, but always a good drill, Dagon. Okay, so that's EuroCAD. The other one from the previous update here was Sterling CAD, another one that is trading in its own formation. We talked about the false break of the upside in early in the week. That took us right back into the lows, okay? And that was 78.54. The levels here, guys, haven't been changed in quite some time. It's kind of freakishly still holding, broadly this slope. So here's what pound CAD looked like earlier in the week. We talked about the false break here of that parallel, keeping us in the confines here, which keeps everything constant. Below 80.25, we still have to look lower, right? You got the spike, failed ahead of 80.25. Again, the break lower, taking us back into support at 78.54. So where do we go from here? Again, the momentum signature is showing some divergence, right, on these lows. Slightly lower low here. The oscillator making a higher low, one below 70, one below 30 into the oversold, one above. So you're not really getting the conviction short on the momentum. Very similar to all the trade setups we're looking at. Could see an interruption while within this formation. We're going to continue to look lower. Okay. It's a break. It's a reversal off resistance. It's coming into near-term downtrend support. Worth a bounce? Sure. Does it change our broader outlook? No. If we break the formation, look for a larger recovery. But at the end of the day, we're in it until we're not. Immediately into the US Open, I do think you get some more upswing. Okay. The whole question is whether you hold that channel or whether you actually see a topside break again. Here's what pound CAD looks like on the daily chart. This one is why I think you got a little bit more downside. Obviously momentum is getting a little tired here right ahead of 40. Not necessarily the best, signal, but there's not necessarily divergence. The close that we made on this dip was higher, so was it in the oscillator. So not giving up yet that you get that spike into 78, but not really something that's kind of prompting attention or prompting something for me to operate on right now. It's just not there, in my opinion. If you get in your channel resistance, look for a nice short against this high to see if you can get that last stab towards 78. If we clear this region, then again, you're probably up for a larger recovery to the upside before continuation. But pound cat again, all these pound crosses, or these cat crosses, excuse me, all coming off of big regions of resistance. Look at this. This is what turned our attention to such a freakish pair. Right? Not a lot of people talk about pound cat, but it was worth looking at on the approach into 83.54. Huge confluence region, 50% retrace, near-term slope resistance, long-term median line resistance. Right? All converged right here. Here's what it looks like on the weekly. Coming into support, which is why, again, I think you can get stabbed lower, but you don't want to chase it too much. But the momentum signature, if we close at these levels, would be a decent break. Remember, price rules everything, though. So even though you're seeing this break here, for me, that break wouldn't really mean much until price gets below 77.36. Then I think you're opening up a larger reversal. Till now, we're just coming off of uptrend resistance. You want to get aggressive. This is the first major key area of support in pound cat. Okay, so if you're going to get a rebound, if you're going to get some sort of exhaustion recovery, this is the area. Okay, sorry, Michael, Euro is on today's menu. Yeah, I'm short play from 2380. Okay, man, 2380 on Euro. I'm just going to jot that down. Okay, we'll get there after one more. Let me just hit Euro Yen real quick, okay? So that's all the CAD crosses that we're looking at. The strength that you're seeing in CAD is great. We've been looking for it. Awesome. Start to curb your appetite into the US Open. Remember dollar CAD coming off that near-term support. And again, we'll be looking to see if that fizzles out close near resistance here or gives us a larger recovery. Euro Yen, and then we'll jump into Euro Dollar. Here's Euro Yen, and this was from the same update. The whole game plan here was to look for resistance at 132.12 into 132.16. Or 32.19, excuse me. You had the November low day close, you had slope resistance, and you had a basic 38.2 retracement. Okay, it's right here. If in case that wasn't enough, you also have the 200-day moving average. All of it converged right here in the upper parallel. So when we came into the start of the week, we were looking for the stretch into that region, and I was telling you guys to look for a reaction there. If we sail through, that would be a conviction break of resistance of downtrend. It would suggest that you're looking higher. If we fail miserably, it'd be a great entry for the short side. So I think this was obviously a conviction break. Momentum took us into overbought on that move. You do not want to fight that. But here's the fizzle out at the 32.44 target, which is just the objective range highs here for March, and the pullback. So on this pullback, this is initial support. Okay, you got to move those targets up a little bit from where we were earlier in the week. That would be bullish inval if we break back below median line resistance. Okay, and this would be straight up sort of last ditch effort, just go bearish. It's former swing highs, 618 extension, 50 line, which has been a decent pivot in price. So that's all to say, guys, the breakout to be confirmed or for it to be a conviction reversal needs to hold one of these two levels, right? Like right here, 32.12, or if we get a little bit of a big rebound, then it fizzles one more low to make a third wave, then max 31.76, but ideally right into that median line, just shy of 32. Okay, so possible entries for the long side if you get the pullback, all things held constant, still looks like a topside break. Next upside targets unchanged, 32.44, the swing highs. I know we went through that overnight, but still keep that as a near-term target, takes them off there. Next upside objective is going to be that 100% extension, 32.86. If the breakout's legit. Okay, we don't know that yet, but on initial approach, breach, that's where you want to find support, continue higher. Okay, questions on Euro Yen? Okay, now we'll hit the dollar crosses here, Euro dollar, we'll hit the abomination. for you. And then we'll also hit dollar Swiss. Sterling's also on the list. So let me get through this real quick. Let me go hit euro. If there's no other questions here on euro yen, here's what the euro dollar looks like. So not to bore you, but again, broader picture. Beautiful spot where we turned. That was the risk. We were starting at the week talking about the fact that the upper median line parallel that we breached above early in the year still has not seen a weekly close below. You're still within the embedded ascending channel formation, so no invalidation there either. So all things held constant, the start of the week, price was at uptrend support. Try to keep things as basic as possible. So here's the rebound. Momentum, sneaky, right? Real sneaky. Here's what it looks like on the daily chart. 2238, 2228, 2240 was the level that we've been talking about all throughout the decline from last month's high. Obviously, we probed just below, but nice outside reversal off the lows. Had us at the monthly open resistance. Here's the break and push higher. Looks exactly like the DXY upside down. No surprise, right? No surprise. So, dollar a little bit further to the downside, euro a little bit further to the upside before you hit lateral levels of resistance. This is obviously the 2018 high day reversal close. It was an outside day reversal close. So, although we pivoted above it here into the close of last month, I'm still going to keep that as a target. Basic trendline resistance off the highs is the break you need to see to get resumption. Here's what it looks like on the intraday charts. Now, I was looking at this real near term before the webinar, just kind of stoking out, what this channel looks like. Again, that was, looking at a convergence region maybe at 2409. Again, the 2018 high day close, what we're looking for. Looks like it's fizzling out. You've been getting divergence all along the entire weekly highs. Higher high, higher high, higher high, a series of lower highs across the board. Puts into focus this support trigger. From the weekly low, a little bit cleaner of a move. Okay, downside break of that support trigger and momentum. Downside break, kind of 2346 would put this in a more pullback mode. I still think, you're coming off a big area of support. There's 2228, 2240, what we were talking about. Really nice rebound, but it is at risk for a pullback here. Again, same thing with the dollar, right? A little bit of a bounce, but there's more room to the downside. Could get a pullback in euro. Still think there's more room to the upside. So for you, Eman, your short play at 2380. Okay, so you're about 6 pips in the money. I mean, yeah, stop against the highs is how I would look to play that. It is a level that we were watching, and you are getting divergence into it, right? But you're coming off of long-term uptrend support. Again, I just want to make sure I'm always drilling home, guys, the kind of trade that we're taking. Not all trades are equal. Trades in the direction of the broader trend, you can be a little bit more, liberal with. Trades that are going anti or counter trend, you want to be a little bit more nimble with, more conservative with. So I like the way you're playing the pullback because there's obvious divergence and there's a level we're watching, a clear, objective 618 retracement, right? Just be nimble on the pullbacks. I don't know what your targets are, but as you get into basic slope support, this is a 3-point touch at this point. That's basically like 2360s. Look for reaction there. Lighten your load if it's a heavy trade. Bring your stops to break even. Ultimately, this is the break that would suggest a larger corrections in play. But even if that does materialize, Eman, I would be looking to buy the pullback. Okay. Does this mean there should be a rebound to support before going long? Ruth, if you're looking for euro dollar long, yeah, I wouldn't be going long here. My humble opinion. I wouldn't be going long at the weekly highs, right? Your risk right here is what? You're going to put a stop against the session lows right here? Because I guarantee you that's probably not going to not end up well. The other major swing low that you'd look for is here, which is next to the monthly open, right? That opens you up in 2320. Well, I'm not going to put a 50 pip stop on an intraday trade. So the long side, in my opinion, need to give us a conviction rebound low or some sort of spike to even think about taking fresh new long exposure. For those of you playing the pullback, again, be nimble. Look at the slope support. If that breaks, this would be your next objective downside target. If that does materialize and you see that break, tack on a quick retracement. Let's see if there's any overlap. Let's just do this right now as a drill. Hey, look where that 236 comes in. Boom. Same region. 38.2 comes in just above the weekly open or the monthly open. And this retracement we can break. That's null and void. Okay. So soften it up a little bit. That's what I'd be looking at for the near term. Top side still 2409 high day close, and then look for that convergence. Right up basically on the upper parallel that we've been following. Eman says 100% playing the rebound. Right on. Right on. You're targeting 23.25. That's a little bit deeper. Here's what I would say. 23.40, watch for a reaction. Okay, the 50% retrace also happens to be the initial April monthly opening range high, Eman. See, here's the April open. So this is your initial monthly opening range high. This is the monthly opening range break. You could find support there before continuation. So, watch 23.50, 23.46, how momentum is reacting there. I would take a little bit off. I'd definitely be at break even or better at this point. And then on the rest of the trade, 23.25, 23.26 to be exact, is the 38.2 would be the play in my opinion. But just watch this region first, okay? Hope that helps. Okay. What was that? That was $0. That was number 7. Euro was number 8. Here's the abomination. Number 9. Thank you, I will. You're more than welcome, man. Here's so we went over euro dollar, right? 23.46 right here. 23.76 is what we turned from right here. So levels remain unchanged actually on the upside here. The only thing I added was the retracement for the near-term advance. Okay, so that update remains in play from Sunday. Here's dollar yen. So look, I thought at the start of this week, and Ruth, I got you on pound dollar too, no worries. And Pete wants to take a look at that as well. I was looking at this slope to start the week, guys, and it looked so clean. I was so excited that finally the abomination looked actually clean, right? And it basically highlighted resistance at 107.50. That's the level we were talking about for a while on the daily charts, irrespective. And what we've done since the start of the week is just, it's bull. Like I don't know what that is. You start to lose respect with pivots along the median line, although you have seen some. This could be a raised ceiling, which would be, bearish exhaustion. But at the same time, every pullback has found resistance or has found support at former resistance. Maybe a little probe below. Is that the low? I don't know. At the end of the day, this has made a simple weekly opening range. So I got nothing. Until that range breaks, a deep side break on the downside, 106.40, 106.28. 106.27, you start to look for reentry. A top side break, you're looking for 107.84, 108.04. Both of those levels are levels of which I still think could offer a bigger turn. Here's dollar yen on the daily charts, guys. This is resistance. We talked about 107.50, 107.45 last week. Okay, former 1618 extension off the high. Okay, cool. We're not going to stress that too much right now, but former swing highs, former swing lows. You got the 2017 low day close at 107.84. Momentum holding ahead is 60, you know what I mean, on the turn. I still think it could probe into those levels and then turn lower again. But as it stands right now, for the intraday picture, there's nothing here that prompts anything, any trades. Guys, you're basically unchanged on the week for dollar yen. So I don't know what the hell to do here. Shotgun approach, if you ask me right now, put a gun to my head. If it breaks down lower to the parallel supports, like I said, 106.28, 106.39, that area I'd be looking for support. If we breach higher, if you're nimble on the advance, you could try to play the long side, but that's not my play. My play would be looking at 107.84, 108.04 for possible exhaustion on a downside move. Right here, guys, you're drawing straws. You're kind of like trying to force a trade, in my opinion. So, objectively, the levels do remain unchanged. There's no change to any levels here. We added a 100% extension. yesterday in the webinar, if that high had held, it brings your attention down to 107.52, but here's the spike and turn ahead of 40 in momentum and ahead of that level in price. So it's in consolidation. Look for a break of the weekly opening range here to give you conviction, in my opinion. Who was that dollar yen for? Who was asking about that? George, that was you, right? Does that help? I wish I could have more conviction on you, and I try to give you the conviction where it is. I just don't have it here. I just don't have it here. But again, if I'm forced to play a yen trade, and I do want to play long yen, I still think pound yen, if the rebound fizzles early in U.S. trade, could get another downside move. But the dollar could see a little up. Yen could have a little bit of pullback. I think you got to be a little bit more cautious here. He says, yes, got it. Okay, cool, Jorge. And I'll keep, I hate the trade, as I always say, just make fun of it, but sure, not me who asked you about the yen, says email. Yeah, exactly. She knows my feelings on it, but I still think it's a decent, slope. It's just near-term momentum has gotten lost. And when that happens, I'll stray away and I'll come back to it once it gets clear again. Sterling yen pullback does look a little better, says Jorge. Yeah, I think so. 51.70 nearing that. Let me take a quick look back at pound yen. All right, yeah. See if we can't get it. Would be the decent play if you're looking for fresh exposure on here. For me, or for people, or for anyone who's short, you want to see resistance here. Again, a break above 151.84, it puts you back at risk because that's the major resistance. So if this fizzles out in this zone, it would be a sweet continuation, in my opinion. All right. So that was dollar yen and euro dollar. Oh, we did euro dollar. Dollar yen was number 9. Number 10, a little bit out of order here, is dollar Swiss. So this is another one that we highlighted earlier in the week. Turning from resistance. You had the 200-day moving average. You had slope resistance there, parallel that we had highlighted in purple there, of the dominant slope that we've been following. Perfect touches, right, last week. So heading into start of this week, I was looking for failure again. I had a 200-day moving average. Ultimately, a move back towards key support would be 95.40. 236 basic retracement objective, okay, of the advance. You have slope support just ahead of that near the March hard day close. So that gave you 95.60 and 95.40 as areas of support for the uptrend support, right, at a critical area. So we need to see how this holds if this is going to continue. Lo and behold, you did get a fizzle out. You did get the move lower, and we're basically trading there right now. So it's make or break for Swissy. Here's what it looks like. Okay. Well, let me show you the broader picture first. Here's the weekly chart. Okay. The thing that concerns me here is there's nothing necessarily imminent here. The retracement's not on here for the sake of clarity, but the breakout is what I wanted to highlight. Came back, tested its support, pushed higher. Okay. Daily chart. Here's that basic slope we've been following off of the yearly lows. A parallel, we added that yesterday, or we added that earlier in the week off the lows here. Seems to have caught the lows that we made yesterday. Rebound is testing immediate resistance at the 100-day moving average. Okay, just shy of 96. So this is your world right now for Swissy. End of the day, if we break below the lower parallel, you're in for a bigger dump. If we are going to do that, this is where you want to see resistance hold, basically the high that we just made. Intraday. And again, break of that 3-point support touch on the upslope. I mean, this is a nasty break. Obviously, it's not the clearest, but on the upslope, you kind of want to see that hold as resistance on a daily close basis to get the conviction trigger to the downside. Here's what it looks like on the intraday charts. I mean, it doesn't get much clearer than this, guys. The dominant slope has been ridiculous. Like I said, a parallel of that extending off of last week's early high, caught the highs into the late week. The parallel off that low that we made for March, catching the lows here. That was 95.40. Here's the upswing. You basically want to see resistance ahead of here. Weekly opening range highs there as well. Basic retracement off the high puts the 618 here, right? 95.06 and 96.13. Give me 8 pip range, but that's where you want to see resistance if this is going to move lower. Okay. Any questions on dollar Swiss? What I do want to note, okay, interestingly enough, the slope is beautiful. The levels are very clear, but you might be thinking to yourself, well, Mike, if I look at this objectively from a weekly range standpoint, it's the same exact trade that you just complained about dollar yen, right? Here's the weekly open, you set a high, you set a low, and you're pretty much unchanged on the week almost, right? So why do you have more conviction on this? It's because where the opening range is happening. Okay, the opening range took shape right above slope support. So if you get the downside break of the objective opening range, then that's a slope support break as well, further fuel on the fire. If you get the breach of the upside of 96.13, you're coming off of upslope support. That would mark resumption. Okay, so where the weekly opening range happened matters. And I think on this one, while you don't have the exact conviction right now, you're looking for a rally here, for a reaction here to break and give you the resumption. The more ideal scenario is you rally here and fail, and we see a larger setback based on our broader picture with the dollar and with the euro. Questions on dollar Swiss? Levels are the same, still pretty damn clear. The only thing that we've added on this, like I said, is just that retracement that we just made for the weekly decline. Further highlights. We want to see resistance ahead of this region. By the way, this could be, just to give you a real near-term slope, or a real near-term picture, this could be it. 2 equal legs if this is correctionary, you know what I mean? But the emphasis is still on a break below 95.40 to get this going. Okay, so that is dollar Swiss. Let's jump into your questions. Who was sterling for? Pete. Here's sterling, Pete. Is gold on tap today? I read a write-up on the zero hedge that gold is at resistance on a daily chart and could break out to trade to the upside. Chris, we'll take a look at gold in a moment, 100%, yeah. But let me do this for Pete real quick. Sterling. So sterling dollar. All right, here's my issue with sterling dollar. It's the same thing that I told you guys about this yesterday. You're at resistance. I don't know what to do on it. I'm bullish and I'm at resistance. So what do I do? Am I going to push along into the resistance level, or do I have to wait for the pullback to get short? That's where I'm at with this, Chris. Which is why on the pullback I was kind of playing it versus pound yen, but you get the 200 long week moving average. It's right there. You have slope resistance, the median line, so you need to clear this on a weekly close basis. Really nothing screaming for me to take new long exposure. You know what I mean? Daily chart, there's the median line, probing through it on the intraday level, but we pulled right back, right? Momentum, not the healthiest. So what are you going to do? You going to try to short this? Well, there could be a short play here. Here's what the intraday chart looks like. Here's the 240. Let's clean this up, shall we? So objectively, I'm going to clean all this up, but remember where we've come with sterling. We were in the downtrend off the January highs. That's pullback off of a critical level. We've been looking at that region for a while. There was the pullback. The break that we got in early March shifted the focus back to the upside. Came at some hairy levels. Wasn't the cleanest pullback, but there it was, and here we are. So at the end of the day, I still largely see this in consolidation. I think you could pull back from here. Okay, 142.10, it's a level we've been watching. 786 retracement from the decline off the yearly highs. It's messy, but so is sterling, a notoriously professionally traded market. And the throwovers, the false breaks of support and resistance, we talk about that all the time with sterling. So let's clean this up, shall we? Let's do a little drill here. I'm going to leave this flat slope because it was such a clean touch, break, support. This, I think we don't have to necessarily stress anymore. Let's take this to the new low. That high is respected still, so this retracement still remains in play. Momentum certainly looks like it's getting tired, right? Sorry, guys, my charts keep locking up. There we go. Degon says short here, 42.10 sterling. So here's the thing, 42.10 is resistance. And if you do take a short here to be against that spike high, but you need to see something in near-term momentum. Let's take a look. Well, there's divergence all up into that high. That actually looks pretty good. Look for some sort of near-term wave count. There's nothing here that really screams. I would look to, if we get here as close to stop to that as you can is the only way I would look to play the short side. Ideally, the things to look for, Dagon, okay? On the upslope and momentum, you want to start to find this thing fizzling out on this near-term chart, 5-minute chart, or even a 10-minute chart. On the upslope, you want to start to see failure near 60. Okay, this break into overbought and then turn here into oversold suggests that if we hold 60 on the upslope here, then you look for another break into oversold. That would be the downside move. Also, you don't have structure. So ideally, you get some sort of near-term slope. So if we make another high here and break down, you'd look with like a pitchfork, right, to something like this, to wherever the new high materializes, right? And then you look to play the downside target. So depending on where this fizzles out, that's where you would look to give this thing some guidance. And then again, real near-term stuff, guys. This is just like drills for you, for intraday guys. But, you know, quick retracement puts the 618 right there. So if you do make a high somewhere in this region with a stop against the highs, 20 pips or so, look for a structure at that point to use that high to give you some slope to the downside. Okay, but you have to be reactive to what near-term price is doing. He says, got it. Thanks, Aaron. More than welcome. More than welcome. Whoops. Not my favorite trade. Who is this for again? Pete. Sterling. Not my favorite trade. But if I was, again, gunshot to my head, that's kind of how I'd look to play this near term. I would be looking to fade some strength while below this region. But ultimately, man, I can't stress enough, this is, you know, pretty strong uptrend. I do want to look for a larger pullback to assert some sort of longer term position on the long side. Okay. Pete says, thanks, you're more than welcome, sir. Dagon, you're more than welcome as well. We also had a question on something else. Did I miss someone? Oh, gold. Chris, I want to look at SPX too, but let's take a look at gold for Chris. Here's my take on gold. So it is at resistance. He's absolutely right. The daily chart on this, and even more so the weekly charts have been pretty clear. I'm sorry about that. On the longer term picture on gold, here's what it looks like, right? Most important thing to understand is the implications of where we are broader. When someone looks at a daily chart and says they're at resistance, people tend to take that as, oh, you know, if we break there, then, you know, you're probably gonna see the larger play. The weekly chart still has us within the January opening range. So that January stretch from the yearly open into the highs is still the range that the market is trading in 4 months later. So it's extremely important, Chris, just to keep in mind, man, that like, you know, 1366 is still the level to beat. That's this year's high, and that's the 2016 high close. So that's the level to beat to actually validate longer term breakout. Support 1302, the yearly open, that's validated here with a slope with a pivot at 1295. So that 6 pip, $6 region, that's key support. Till we break that, I really wouldn't call this a breakout until we break that range. So I just want to kind of take a step back, Chris, before we start to scream breakout. This is, you know, the broader objective picture. Now, in the near term, daily, there might be opportunity if we settle a daily close above this. Why? Well, this is your objective monthly opening range. Here's your monthly high. You spiked right into the 2018 high day close, which was 1348. We came right back. Near-term support at the yearly low day close that we made in March was down here at 1316. We turned ahead of that. If this break materializes today and closes above basic slope resistance, that would be pretty bullish. It would also be a break of the objective monthly opening range and would suggest you look for 1366, that key level. And beyond that is the breakout, right? 1379, 1377, and then up into 1391. But daily resistance, I would just be looking at this slope. Where we close today does matter. You can see that on the final approach, or on the previous approach, I should say. We closed right there after spiking through on that day, then moved dramatically lower. So today's close matters. You are at resistance. If you're asking me, would I short this? Personally, no. I do think you can get a pullback, but the game plan here would be to buy the pullback if the breakout is legit. Let's see if we have any upslope here to work with. Yeah, this looks a little bit more appetizing. Resistance, resistance, resistance at that same level of resistance that we're looking for. Again, that's 1354, 1356, 1355, 1356, excuse me. And it puts the median line or the 50 line in a very interesting area. Pivot, support, break, acceleration, resistance, 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 break, instant support, support, support. Keeps the focus higher. While above, well above 1342, 618. Okay, so look on a pullback here, look for support or a turn ahead of this region. The breach here, 1366, 1377 are your next upside targets. Make sense? Ruth says, what do you mean notoriously professionally traded market? It seems it does not operate according to a lot of trading guidelines. Yeah, Ruth, it's known. I mean, just from anyone who's traded on desks here in the city or at any major banks or brokerages, it's just we've all known it to be that. It's king of breakthrough resistance, the throw over when price runs through resistance and pulls back. It's just a very indicative, different currency fluctuations, guys, with different currency pairs have sometimes their own attitudes, their own like behaviors. You'll hear me say the abomination dollar yen. That's because very similar in that tends just to run. You know what I mean? Run through resistance and just keep going. Get stuck in a trade. Ruth on sterling, it's notorious. It's done it a million times. I can show you a million examples of a breakthrough resistance, a pullback, and all of a sudden it washes everyone out, then continues. Same thing with a support, a dip below support and a rip. So we would always, just on the desk, we always had this, common understanding that on the sterling trades, we have to be a lot more nimble. You got to be a lot more respectful. And it's very heavily traded. It was one of the most widely traded currencies, obviously. Hey, Mike, would you have enough time to do the SPX? I promised that, George, and I will. Thank you. I appreciate that. Says Christopher A. More than welcome, sir. Doesn't a short near the median line look good, Dagon 1354? Yeah, like I said, if you're going to play a real near-term pullback, that would be the play. So you'd look at 1348 and 1342, but counter trend, right? At the end of the day, like I said, it's at the top side of the range, so you could play the pullback on the nimble approach, but ultimately I do want to see gold break higher. So who was the question? Jorge, SPX. Real quick, I am over on time, but here's what the SPX looks like. Guys, it's important to keep the objective picture. Everyone's getting all amped up as the SPX oscillates, but guys, we're still holding key support and a key range, okay? We talked about 2586. That's the 618 extension from the decline off the highs. It converged on parallel support of the dominant slope we've been working with in the 2015, 2016 lows. You spiked below on an intra-week basis last week, but it held right at the long-running 52-week moving average. Here's the rally. Ever since we broke that downslope, it's been resistance. So this is your world for the SPX. There's going to be a lot of noise. Like I said, the tweets this morning from the president are kind of like roiling things a little bit, but don't get sidetracked. Okay, there's no conviction here until you clear this range high for the play reversal, which I do think you get a rebound. Or if we settle below these lows, 26, 24.68, 24.53 would be the next objective downside play. Okay, so you're still on a real pivotal area here for SPX for broader risk assets. That's the weekly chart. Daily looks like this. Okay, there are both of those levels, right? The swing lows that slope caught. So you're in consolidation, series of lower lows, a series of lower highs, a series of higher lows, puts this thing into consolidation, in my opinion. Intraday charts, and by the way, we did get the trigger break, pull back into support and rebound. So momentum isn't really favoring continuation lower yet. The intraday chart has gotten messy because this slope was holding so perfectly, so well, and then it started to get messy, right? So what do you do with that? Again, play it basic consolidation, in my humble opinion. Basic slope support off the lows continues to highlight that major key support at 25.86. Here's slope resistance off the highs. Boom, boom, boom. Continues to highlight 26.66 as resistance. That's what we highlighted early in the week. We turned right ahead of it. Ultimately, 26.76 would be the breakout play for this move. Okay, but until we break this consolidation, look, it's a range. Don't let anyone sell you otherwise. It's just simply a range. The risk is material if we break 25.86 again now, because that is range support or consolidation support. So if we do break this, the risk absolutely is for that drop near initial soft target 25.30. But again, those targets I talked to you about on the daily chart, shotgun to my head. Again, I do think you correct higher before you ultimately turn on this thing. Okay, Chris, does that help? Or George, does that help? All right, guys, I'm way over on time today, so I'm going to wrap it up here. As always, don't forget, we've got Jamie on tap in just a few hours with the midweek strategy webinar. I will see you all bright and early tomorrow to wrap up the week. Till then, best of luck trading. Cheers.